Hello and welcome to Markets Today. I'm Lata Venkateshan. Joining me from the New Delhi News Centre is Surabhi Upadhyay. It was a very good day for trading. Actually, the markets whipsawed for the better part of the day despite good news coming from Moody's rating agency upgrading the outlook on its India rating. But the last hour of trade saw the bulls completely take charge and the markets ended closing in on that 8,800 mark. All told, a very good day of trade, which probably takes the index to a new range of trading. Hi, Surabhi.
Hi, Lata. What a respite going by what we saw last week. It's so far so good as far as this week goes, I guess. Let's start with the top headlines. The bulls take control of Dalal Street as markets share the India outlook upgrade by Moodys. The Nifty ends 0.7% higher, closing in on the 8,800 mark. The Sensex closes just below 28,900. Bank stocks surge, metal shares see strong buying, but pharma stocks lose ground on profit booking.
Moody's upgrades India's outlook to positive from stable, but the rating remains unchanged at Baa3. The rating agency tells CNBC TV 18 that an upgrade of the sovereign rating will depend on an uptick in investment and implementation of reforms. Chief Economic Advisor Arvind Subramanian says Moody's outlook upgrade validates the broad direction and stance of government policies.
RBI Governor Raghuram Rajan says Moody's outlook upgrade is positive, but India must do more. Says there's no panic on the rupee just yet, but the RBI will be keeping an eye open on significant overvaluation of the currency. Rajan says he's not ruffled by the state deficit, adds that high-quality spending can actually be good for the supply side.
Mid-caps underperform blue chips, so with the mid-cap index ending flat. Realty stocks cool after yesterday's good rally, but media stocks like Network 18 surge between 4 and 8%. Inox Wind has a stellar listing, with the stock gaining 35% on its first trading day. Well, those are some of the headlines that we got from the markets, and here are the experts that we have lined up on the show for you today. We get you a slice from the exclusive interaction we had with the Reserve Bank Governor. The Chief Economic Advisor to the Finance Ministry speaks on the Moody's upgrade, and Nilesh Shah of Envision Capital speaks on the road ahead for markets.
All right, so lots of opinion coming your way, but let's start first with the trading action and, of course, all the details of the day's trade. Moody's outlook upgrade served as a shot in the arm for bulls on Dalal Street as they continue to march forward, but they left it late once again as markets rallied in the last few minutes of trade. Anuj Singhal is here with the wrap-up of the day's trading highlights. Anuj.
Well, two things. One is that the Moody's upgrade of outlook did have a role to play because the Bank Nifty surged in trade today, nearly 500 points. And second point is that why the market should be happy is that after a long time, good news was not sold into, which was a risk at one point in the midday trade. But the fact that in last hour the market came back, or the bulls came back, would tell you that bulls are now happy about good news. So I think that was far more important takeaway in that last hour rally. But really today was about banks, about Reliance. These stocks really led the market despite the kind of fall that we had in pharma stocks. Let's talk about some of the stocks then where we saw big gains, and really it was all about banks today. PNB, IndusInd Bank, Kotak Mahindra Bank, all index stocks were up nearly 5% in trade today. Not just that, some of the other big ones like HDFC Bank, ICICI Bank and SBI, the three big ones, they were also up about 2% in today's trade. Apart from that, the other stocks that led the market higher in terms of heavyweight action, Reliance was up 3.5%. That's up 6.5% now for the week. Tata Steel was up 3% and Hindustan Unilever was up about 1%. On the losing side, you had a couple of pharma names and a couple of other names as well. So Sun Pharma was down 3%, GAIL was down 3%, and telecom stocks corrected today. So the Bharti stock was down about 3%. The listing of the day today was the stock of the day as well, Inox Wind. That stock was up 35%. So that really was a phenomenal listing. Apart from that, some of the other mid-cap gainers in trade today included Rico Auto, Z Media and India Cement. There were just some names. There were a lot of stocks gaining between 7 to 20%. So the Nifty is now above that 8750 zone. It will be interesting to see if this leads to incremental short covering and whether this leads the market back to all-time highs. The key would be for the Bank Nifty was today just a flash in the pan, or has the Bank Nifty bottomed out and is ready to make a big move towards 20,000.
Thanks a lot for that, Anuj. I take your point, but I will take it forward on Bank Nifty a little bit more. It wasn't just the Moody upgrade. It's also a couple of things that Governor Rajan told us that would have been a shot in the arm. He didn't seem unduly perturbed with the fiscal deficit of the states and said that deficits are okay if they are towards improving the supply side and are not wasted on badly targeted subsidies. He also made it a pointed statement that he's happy with the way banks are restructuring, and though he will not call a top to NPLs, he is nevertheless sure that as deposits costs fall, the banks will drop deposits, drop lending rates further. All told, he exuded a certain confidence both in the inflation trajectory, in the growth trajectory, and in the banking system. Well, more on that later. First, the big news that came in the morning: Moody's Investors Service has raised the outlook on India's Baa3 credit rating from stable to positive. This makes it the first of three major rating agencies to upgrade its view. The revision to the outlook was based on the perception that India's policymakers are putting in place mechanisms that will allow the economy to outperform its peers over the medium term. Moody's is upbeat about recent measures to address inflation, simplify the regulatory regime for investors, increase foreign direct investment, and facilitate infrastructure development. But does the outlook upgrade mean that a sovereign ratings upgrade is also around the corner? That's exactly what we asked Atsi Seth, the author of the Moody's upgrade report. Let's hear her out.
Well, the sort of conditions for an upgrade as such are further evidence that the kind of measures that the government is starting to announce to improve the growth outlook, whether it be in infrastructure, whether it be in foreign direct investment, and whether it be in terms of improving the regulatory environment as such, whether these measures are actually implemented effectively and whether they lead to an uptick in investment. Because as of now, the investment environment is still subdued. We're seeing growth pick up, but investment is, compared to historical averages, still relatively low.
That was Moody's with their view on India. Well, RBI Governor Raghuram Rajan believes that this outlook upgrade is presumably the first step towards a ratings upgrade, but he also had a word of caution. In that exclusive conversation he had with Lata, Governor Rajan said that he believes more needs to be done and India cannot lose sight of that. Other North Bloc officials also termed Moody's upgrade as a shot in the arm for the country. Let's hear out all the reactions and, of course, Governor Rajan.
When they downgrade us, we claim not to be very sort of focused on these ratings. So I think we should be equally we should display equanimity at such times. No, the real issue is, I think this is, a positive perception of all that has been done in the last few quarters. But I think going forward, there's so much that we need to do, and so we shouldn't, lose sight of the work that remains. I've always said we have a lot of low-hanging fruits to pick in India, and the tragedy is we haven't actually picked them. So let's go about and pick them quickly.
The Moody's decision continues to reaffirm the faith that rating agencies, global investors and our own domestic businesses have in India's growth outlook and our financial strength as a sovereign as well, which is what Moody's has indicated also. The macroeconomic situation over the last 10 months or so while we've been in office has improved dramatically, as we would all agree.
This upgrade of the outlook validates the direction and pace of the government's reform program and the reform agenda. Second, it also confirms something we've said for some time now, that it confirms the fact that the growth prospects and the macroeconomic prospects for the country are improving. Third, I want to say that, and it's an important point because something that credit rating agencies focus on, is that it kind of validates also the strategy in the budget.
We will get you more from that chat of mine with Dr. Raghuram Rajan, but for now, let's go across to Varinder Bansal for all the day's action from the futures and options space. Varinder.
Well, a surprise day of gain today, clearly, when Nifty managed to close off that 8,750 mark, a crucial mark. And on the option side, things were pretty clear, you were seeing put trading happening at 8,600, 8,700 level, and you are seeing call buying happening at 9,000 level, clearly indicating that the short covering might continue for some more time. There were a few stocks which are leading. Of course, banks have to be the one, which led the market gain today. But few mid-cap stocks were very active today. India Cements, clearly, that stock was up nearly 6-7% today, gained 5% yesterday. We are seeing huge open interest build-up happening on that stock. Open interest went up by nearly 18% on India Cements. Even Tata Communication was strong since morning, up by nearly 5%. Open interest moving up by nearly 6%. And the entire housing finance companies, the entire pack of that was very active today. Of course, it was Indiabulls Housing Finance in the F&O market, which was gaining nearly 5-6%. Open interest moving up by nearly 12%. As I said, it was the entire banking pack which led the market recovery. PNB, OBC in that PSU banking basket were very active. We were seeing some build-up happening over there. Kotak Mahindra Bank, ING, VSI, you put your finger on. Also, keep an eye on one stock, which is Colgate. That stock was up by nearly 3.5%. Open interest moved up by nearly 18% on that stock. That could be important to watch out for tomorrow. And it was the pharma pack we saw, profit booking today. Clearly, so Strides was down nearly 5%. Open interest went down by nearly 3%. So long unwinding seen over there. And we were seeing some shorts opening up on Wockhardt and Lupin. Both stocks which were down anywhere between 3 to 5%.
All right, Varinder, thanks so much for that. Well, let's move on to some other news that we are tracking. Cheer for consumers, but more strain on the balance sheet of telecom companies. The telecom regulator TRAI has slashed the ceiling tariffs for national roaming services. Telecom companies have been told to follow the new rates starting the 1st of May. Rima Tendulkar is here with more details. Rima, how much have tariffs been reduced by, and how much of a hit will this be for the companies?
Thanks so much for that. Well, all the telecom stocks closed lower by about 2.5% today. This is because TRAI has reduced the ceiling tariffs on national roaming. So the national roaming voice tariffs have come down by 20%, while the national roaming SMS tariffs have been cut by close to about 75%, and this is effective 1st of May. So the outgoing local voice call, where the current ceiling is 1 rupee per minute, has been brought down to 80 paise per minute, and even for a local SMS, where the cost was 1 rupee per SMS, at least that's what the ceiling was, it's been brought down to 25 paise per SMS. Now, roaming roughly constitutes close to about 5% of the mobile revenue, which means that this cut in the ceiling tariffs will imply a cut in the roaming tariffs, and that will hurt their revenues by close to about 1% and the EBITDA by about 2 to 3%. Though there will be some benefit of elasticity, which means that lower the tariffs and more, the volumes could be more because, it's now just cheaper. But, the other way to look at it is that the TRAI had come out with a draft proposal where they had recommended a 35% cut in the voice tariffs and an 80% cut in the SMS tariffs. So compared to the draft policy, the actual recommendations are a lot more moderated. So the voice tariffs, instead of the draft proposal of 35% cut, it's only suggesting a ceiling cut of about 20%, and similarly even for the SMS. So in that context, it's not the worst case scenario for the telecom companies, but now national tariffs will have to come down because the ceiling has been lowered, and in that sense it's a negative for the telecom players. Back to you.
Probably a negative for telecom companies, but not for me, Rima, and not for you, I would assume. Thanks a lot for that. Time now for a short break. But as promised, here's more from our interview with the RBI governor. He believes that we have no reason to panic over the rupee's appreciation just yet, but he also added that RBI will have its eyes wide open at the rupee's trajectory. We will take a look, and we'll be back after a break.
When we talk to exporters, some of them say stability is what we really want. We don't want a very volatile rupee, but otherwise we live with it. Service exports have been picking up more strongly, and if the rupee was so detrimental, you would see that falling off, and that's not. And even while wages in the service sector are going up. So all this tells me that there's no need to panic right now. But that said, do we want to see a relentless appreciation of the rupee over time? Obviously, that would be problematic if that weren't accompanied by significant improvements in productivity. Now, I don't want to immediately also say that some people look at the CPI enhanced exchange rate to get the real effective exchange rate. And there could be some debate about whether you should enhance it by the WPI or the CPI, because WPI reflects traded goods. And so somebody who's importing goods in order to export would be seeing an inflation rate which is closer to WPI, assuming a stable currency, rather than CPI. So I think the overvaluation numbers that are coming out using just CPI and not adjusting for productivity are perhaps a little too alarmist.
Okay.
But that said, we are keeping our eyes open for signs of significant overvaluation. Of course, there are questions of if that does happen, what actions?
What levers do you have other than buying dollars?
Well, there are some levers like that. But I think a lot of the onus will also be on our industry to get more productive if it finds that we have an appreciating rupee beyond their capacity to sell.